All right. Okay. Welcome to week ahead for the first trading week of June. So the year is almost half. So like we normally do, we give you, if you watched our previous week ahead, overall covering the major markets, the macro first, which drives all markets, majority of the markets. Then we segue into bond to just look at what the yield is doing. Then we look at what is happening in equity, both Nigerian side. Then we now pivot down to FX. So basically that is the play here. So from the macro front, as at last week, just like we update you so that you know what changed from last week after all the incoming data, the fresh things that happened. So you can read about this. So we make a post about it on our X page, which you can follow us on X. The link is down below. You can download the complete graphics there or read. So the first meet that in US growth slowed down. So the GDP came in lower than prior quarter. So growth slowed down significantly. One of the things that is keeping the growth we are seeing is from the consumer side, and it's also interesting to know that things has kicked off since the government shutdown was resolved. So something like activity, government spending somehow resurfaced, but that is just know that overall that growth slowed down in the US to 1.6%. The second thing is in Canada. Canada, the growth stalled. So the growth stalled in Canada. No growth, it's just stalled out at the negative 0.2. So which is a bit concerning too for the BOC, because the labor market is not looking great. The job market is not looking great. And when you're having such from the growth side of things, from the labor market side of things, then the market can start doubting whatever you want to do with it, or else you want to hike into low growth, because normally you hike sometimes, unless you just want to sacrifice because there is no growth there. Then the next thing that came out is in Australia, inflation ticked down. Why? Because of the excise duty was reduced, that the importation cost was reduced, so it helped to take hold. And just like we saw what the UK guys did, so Australia is the third one of the third largest economy that we track, that we have seen a tick down in inflation. It started with the UK, then the next on the radar was in Japan, then now followed by UK, and all of them there was a kind of somehow intervention. For the UK on which we said last week was from the front of energy price was capped. Japan on was subsidy. This guy's on was reduction in excise duty. Then the next thing that happened last week too is interesting to see that RBNZ, that is the Reserve Bank of Australia, New Zealand, they held rates, but they were signaling that inflation is going off the roof. So the market interpreted it as a hawkish hold. Then second to the last thing that happened last week was in Japan, the labor market strengthened. All parameters showed a strengthening labor market. Unemployment ticked down back to 2.5%. The job to that's vacancy ratio ticked over 1 point. That means there are more jobs than people looking for work. The participation rate ticked up. Out of labor force also dropped down. So all the metrics, if you put it together, you see it is like a very nice job market out there for the guys in Japan. Therefore, the Nigerian guys, GDP in Nigeria Q1 grew at 3.89%, even though it was slightly lower than the prior quarter growth. So we have to know that Nigeria, the biggest contributor to Nigeria GDP is trade. So you can read about those things on our page. So now segueing into this current week, looking at the bond markets, if you look at the 10-year yield across the major economies, you see that the bond vigilantes, sorry, let me get it out of the way. The bond vigilantes, they are very much active, but they have, these oil prices are coming down, so that inflationary concern looks like it is dialing out a little bit, but they are very much active. So you see that in UK, you see you dropping below the 5% it cost at a time. In US, it was crossing above 4.6, it ticked down. So generally, the years are ticking down a little bit, but the vigilantes are still very much awake. Then for the macro this week is a data light week. So from the US, we are going to see the labor market related data, starting with the unemployment, the NFP, and stuff like that, to see how that side of the economy is faring. And this will feed into what the Federal Reserve is going to do in their upcoming meeting sometime. Yeah, upcoming. Sometimes this I will stake, but just to all eye on that data to see if the labor market is cracking. Already, the unemployment is sitting as 4.3%. Then the last NFP print, there was addition of job. It beats expectation and stuff like that. So all eye on that to see how the labor market is gonna show up. Then the same thing in Canada too. Canada already has a weak labor market. So let's see if there will be a turnaround or if the love affair will continue. Then for the Eurozone, it's an Eurozone data week, ranging from their inflation data, their growth data, and their labor market data. So watch all those metrics will determine what the ECB is gonna do, which is European Central Bank, because already the Bodily General Market is expected them to price. Already inflation has ticked up in the Eurozone as a block to 3%. The incoming inflation, if you look at what the market is expecting, see the market is expecting to tick up more. So all these data will determine if the hike the market is pricing in for ECB is gonna hold. Then the next thing on the radar is in the Switzerland. We're gonna see the growth data and the labor market data. So Switzerland, the economy is pretty in a good place at the moment, and we took advantage of it in some of the trades we took this month. We bought Swiss 2 times against the euro and against the New Zealand. It went in our favor from the currency side of things. So it is pretty placed both from the labor side, both from the growth side and the kind of overall. So it's pretty placed. So all I have to look at those data and see what are you going to show up. And finally, from the macro front is we are going to look at the growth data from Australia. Very much important. Remember, they are hiking already. So to see if the growth is harming the hike, which might start leading to the market pricing in or dialing out some of the hike they are expecting. Already their labor market cracked. Earlier this last month, unemployment came down. Labor market cracked. What was it called? Inflation ticked down. So these are another domino we are watching to see what happens before you put it together and form an idea. Now from the equity front, before we go to the chart and show the currency guys. So you have to know that we are equity research firm. Watch our YouTube channel. You see we are breaking down detailed analysis, premium analysis on firms one by one, detailed. On our X, you can download all those graphics. So from the equity fronts, it's interesting to see that Anthropic, being the second favorite or whatever AI model out there in the market, they raised fresh money close to the tune of 900 plus billion. They are now knocking on the door of $1 trillion. So SpaceX too, they have fight for their IPO, but they finally revealed that they held more Bitcoin more than what people thought at a time. So interesting to just know that. Then, while for the Nigerian space, Nigeria, outside that the insurance are raising capital, they are recapitalizing just like banks did in Nigeria. So the recapitalization will come to an end somewhere in July. We still reconfirm, but just know that they are dialing out their capitalization. Another thing is to notice that in Nigeria, the rating agencies has upgraded their rating, especially the SMP, that's Standard and Poor. They upgraded them to some of they first initially upgraded the government's securities. Now they are upgrading some individual securities to be stable and stuff like that, which is a pretty nice thing. Then finally, on the geopolitics front, sorry, the Iran-US is still very much on, back and forth, but it looks like they are boxing in a corner. The oil market has priced it in to come down, but remember, it can go anyway. So always prepare for that. So let's just look at some of the trading opportunity we are going to look at from a currency front. When for the equity front, two opportunities are showing up on companies to invest in. You can reach out to us so you can get your hand on those lists of companies. You get your hand on our research material on companies. You can invest in the NGL. So we are piling the list together. The research team is putting it together because to ride the next wave from now towards the end of the year, and some foreign stocks too, we are putting up the list so you can reach out to the team so you get your hand on it. Then for this week, as the week evolves and the currency front, we add to the rate about these are the 4 pairs we are going to watch. Then for the we try to buy the yen. Now we try to buy the yen using the Aussie if the opportunity comes from a technical point, because another thing you have to know about coins is it's not just the fundamental bias. Another thing is you have to wait for the technical levels to print too. So if you know any of your technical strategy, you can declare that out. The parts now, we are not calling for a total reversal, but we will try to short it too, and we find the technical level. The same thing applicable to GBP, JPY. The same thing, we'll be looking for selling opportunity. For the USD card, we'll be looking for buying opportunity. And of course, for the NZD card, we'll be looking for buying opportunity. So these are the 4 trades we'll be trading as immediate as we'll be looking into. Then as those data are coming in, we'll be prying into our model to see where the opportunities are shifting, because it is those data that reshape the opportunity as the market flows into the week. So we're wishing you a profitable week. Remember to follow us on X, subscribe to the channel, like, subscribe, comment, share, stuff like that, engage, and go to our X page and download graphics of all I have said and read more about them. They are there, free research. If you're interested in equity, read, follow, watch. If you're in the market, I think you should start also looking into equities for investment. This is how you build wealth. You can trade your currency, trade your crypto, trade your commodity, but you have to, if possible, have the exposure in the equity market. Invest and even if you're trading equity, if possible, so you can have a balanced portfolio. Till then, see you on the next one. Peace.